My name is Janice Musselwhite, and I've been with Gabelli Funds for 20 years. I'm just going to take a quick 30 seconds to introduce our portfolio managers who will be presenting this morning, starting with Lieutenant Colonel Tony Bancroft, United States Marine Corps Reserve, who joined the firm in 2009 and is currently a portfolio manager for the firm's flagship closed-end fund, the Gabelli Dividend and Income Trust, and the Gabelli Commercial, Aerospace, and Defense ETF. Tony is also a senior analyst covering the aerospace and defense and environmental services sector, and previously served in the U.S. Marine Corps as an FA-18 Hornet fighter pilot. Following Tony's session, Max Sykes will spend some time talking about opportunities in financial services. Max Sykes is a portfolio manager of the Gabelli Dividend and Income Trust, the Gabelli Equity Trust, and for separate accounts. He is also the sole portfolio manager for the Gabelli Financial Services and Opportunities ETF. So now I'll turn it over to Tony to talk about what he is seeing within the aerospace and defense sector.
Good morning. Can everyone hear me? Thank you, Janice, for the introduction. So I previously flew the F-18 in the Marine Corps. I've got about 1,500 hours in the Hornet and about 150 traps. I deployed on the Carl Vinson in 2003. And then to Iraq in 2005 for OIF-2. And then I spent about 6.5 months in Korea and Japan in 2006. So I've seen the Western Pacific and I've seen the Middle East, and it'll sort of help me maybe form what I'm talking about today. Today, we're gonna be talking about aerospace and defense, and I'll just give a quick overview of it. We'll talk about commercial aerospace first, and then a little bit about defense spending. So here's the essentially a total addressable market for the commercial aerospace industry. Over the next 20 years, they're going to build about almost 45,000 planes. The fleet's going to double, and they're going to have to retire a lot of planes, but they've been holding off on that. The last 20 years, you can see this is a relatively accurate forecast. Last 20 years, the fleet essentially doubled, and they built about 20,000 planes. This is the current fleet and the prior fleet. This is the Airbus 320 and the 737 NG. This is by far the workhorse of the fleet right now. And the next generation is going to be aircraft like this, which we already are flying, but it's new technology. The Airbus A350 and the Boeing 787. These planes are about 50% composite material, so they're quite a bit lighter, they're stronger, they're faster, and they've got better engines, more efficient engines. They burn hotter, they burn cleaner, and this technology is going to keep coming as we go on. You've probably seen an engine called the Rise engine, and that's going to be an engine that has a much bigger open rotor, and it's going to have these planes have about 11-to-1 compression ratio, so that's how much air comes in versus how much goes out. These Rise motors are going to have about a 75-to-1 compression ratio. So it'll be way more efficient, way more sustainable, and essentially a better ride and for everyone. So, sorry, this thing's a little. So in the near term, where is the industry growing? Is it going? Right now, we have this huge backlog. There's 2 OEMs, there's Airbus and Boeing, and they each have about a decade of backlog. After COVID, the industry changed from the low-cost carrier model, which still is very prevalent, especially in emerging economies. But in North America and in Europe, the business travel has become much more prevalent and much more profitable. It's only about 15% of 15 to 20% of the revenue, but it can be upwards of 75% of the profitability. So these new aircraft are going to have really nice interiors, better cabins, and it's going to be a better business model for the carriers. And then thirdly, the next issue is still Beijing, right? China still has not fully recovered for their commercial air travel. They've internally recovered, so their intra-country travel is doing well, but globally they're still limited, particularly to the West. And them buying aircraft is also still an issue. And remember, China is going to be about 20% of the growth in the next 20 years. So that 44,000 planes, almost 9,000 or so are going to be going to China, 20%. So that's a big number. So again, here's the China fleet. They're gonna be building a lot of planes, and they will be buying a lot of Western aircraft. I just want to give a quick overview of the resiliency of the industry. These are sort of in the last, let's say 20, 25 years, these are the three large issues that have popped up in the commercial aerospace industry. Obviously, the Gulf War, I'm sorry, the 9/11, and then the Great Financial Crisis, and then COVID, of course. And you see that the industry rebounded almost immediately. Everyone thought no one was going to fly anymore, and the reality is that there is a up-and-coming middle class in China and India, about 300 million people that are going to want to fly and spend money and travel and see the world, sort of like the rest of Western Europe and North America. So that driver, that huge tailwind, that secular tailwind, keeps pushing the industry. So the other drivers, obviously, like we said, economic growth, annual passenger growth. You get deregulation. When I was a kid, essentially half the locations that we traveled to in the world were not open, right? So the world's open, the fall of the wall, the opening of the East, the Far East and the Middle East, and then the low-cost carrier model. These are all long-term secular trends that are going in the way of commercial aviation. Okay, and this is just a quick breakdown of the fleet that's in service and new deliveries versus the last 20 years and this 20 years. And then I'll break it down a little further. Sorry, this thing. Okay, and then this is just the breakdown on what it is. The single body, the narrow body, the single aisle is the mass majority of the growth. Everyone wants to essentially go about 33,000 to 3,500 nautical miles, and most of the travels is there. Wide bodies are about 8,000 or so are going to be wide body aircraft, and then regional jets are going to pretty much be stagnant, and then freighters will grow a little bit. So that's the growth. Here's the backlog. We've got essentially decade long of backlog plus, and these are at the run rates right now of production. Production's still pretty below what it was target was. And then I just want to quickly go over defense spending. It's obviously a pretty big topic right now. We just saw what happened in Iran. The United States defense spending historically has grown at about 7 to 8% CAGR. This is projected out at about 2% CAGR. So there's been a lot more defense spending than what the world is expecting. On a global basis, the global defense spending is about 2.7 trillion. Of that, NATO is about 1.5 trillion. And of that, the United States is actually going to be about $1 trillion. These are from the Green Book from the U.S. Defense Comptroller. I think the big takeaway from here is just you saw this morning, President Trump backed NATO fully and said we're going to need 3.5% of GDP spending. If we go from our target of 2% right now to 3.5%, that's another $500 billion of defense spending. So I think you can see sort of the big picture in summary. Commercial aircraft are going to be growing in the next 20 years plus, and defense budgets will continue to grow. I'll cut it short here, and I'll let Mac talk about financial services. And at the end of our discussion, we can do some Q&A back at our booth. Okay, thank you.
It's nice to be here today. Again, my name is Max Sykes from Gabelli. I just want to talk about my colleague. When we talk about core competency, it's one thing to talk about financial services, but this is a gentleman that was in the armed forces, flew carrier planes. And so when we sit down and talk about technical analysis of bombs and aircraft, even the Boeing incident that happened recently, there is no other person that's better in research that can give clarity on that. And you can see that from when he's on CNBC as well. So this is a true individual expert, and he's picking stocks for you.
You should consider the ETF's investment objectives, risks, charges, and expenses carefully before you invest. The ETF's prospectus is available from GCAD Distributors, LLC, a registered broker-dealer and FINRA member firm, and contains this and other information about the ETFs, and should be read carefully before investing. To obtain a prospectus, please call 888-GABELLI or visit https://www.gabelli.com/fund/ETFS/intro.